Hey, welcome everyone. Tonight's topic is buy now or should we wait to buy a house? Um, so I definitely want to jump into it, right? So right now we're currently seeing a record. We're seeing the lowest interest rates that we've seen in over a year, right? To be exact, the last 16 months. However, however, the biggest question that people have is should I buy now or should I wait? And I'm going to say it all depends on how the interest rates affect your qualifications, right? So, whenever you hear me talk, I'm always going to say the best time to purchase is when you can afford it. But right now, interest rates are definitely on the decline right now. And this is prior to the Federal Reserve making any type of cuts to interest rates, which affect, and I'm always going to say this, affects interest rates on student loans, personal debt, credit cards, car payments, anything like that, right? However, it has a indirect effect on mortgages. So, should you buy now or should you wait? I would say get if you're pre-approved and you've been sitting on the sideline because you couldn't find anything in your price range, I would say go back to your lender and ask them to give you an updated pre-approval based off of the interest rates that we currently have now. If you are currently not pre-approved, but you were sitting on the sidelines to see how much you can qualify for, then I would get with a lender and see if you can qualify or what you need to do to get in position to qualify. Hold on a second. So see what you can do to get in position to qualify. With that being said, interest rates have dropped. I've quoted someone as low as a 5.75 interest rate. Using FHA financing. Conventional rates, I've quoted as low as like a 6.5. Just maybe a good month and a half, 2 months ago, we were heading towards the eights in terms of, and quoting people in the eights on conventional financing, and on FHA, we were actually quoting people in the high sixes, close to seven. So, currently we are seeing a shift. We're seeing a dramatic change in some people's pre approvals. So you're wondering, hey, what should I wait? And the waiting part is okay, do I wait until rates continue to drop? And the magic question is going to be yes and no. If the interest rates now have you where you could purchase, I would say take a look at it, right? Purchase where you need to be, where your monthly payment needs to be. You could be in a position where, hey, you wanted to qualify for a payment around 2,500, but that payment, the price amount wasn't as much as you thought it would be. Now, with the drop in interest rates, you could potentially have those payments a little bit lower. You also want to do a couple of things as well. Even though interest rates have a great effect on how much you pay in terms of principal and interest, there still are two other factors that affect you qualifying. Homeowners insurance, which we've seen increases in homeowners insurance nationwide, and not nationwide, the insurance company, on a nationwide basis, homeowners insurance increasing all over, whether you've had claims, no claims, theft claims, whether you had renter's insurance, not renter's insurance, good credit, bad credit. We're seeing a lot of people who are qualifying, and then when they find a house, their homeowners insurance is sometimes double what we've estimated based off their location and the way they rank. So homeowners insurance is another thing. We just, in my county, again, we just got a tax bills. Surprise, property taxes have increased. So, when you're getting pre-approved, and yes, it's great for interest rates to be dropping, but you also have to take in consideration that homeowners insurance and property taxes are increasing. And the way that I would say to combat the homeowners insurance is something that we can kind of control a little bit, is to shop around and see who can quote you a better rate. Sometimes you may have to take a slightly higher deductible, depending upon your rankings. You want to make sure that you try to get as many discounts as you can. So a lot of companies offer the home and auto bundle, so to make sure that you're getting the best possible rate that you can. And then something, nothing to do with homeowners insurance, but just saving money overall is potentially take the defensive driving course, so you can save some money on your auto insurance. And then when you're looking at homeowners insurance, small things like just thinking about putting into play having a home security system, as well as having a fire extinguisher. And when I say home security system, I don't necessarily mean having the ring camera and ring camera lights. Consult with your homeowners insurance company when you reach out, or whoever you have your auto insurance with, just to get get them to verify what I said. However, in order to get a discount on your homeowners insurance, it has to have cameras, and it has to be monitored. Well, the security system has to be monitored. So ring cameras are not monitored. Something like a ADT or Vivint, those are, or I think it's Brinks. Those are all monitored, where they reach out to the police station. They let them know, hey, 123 Main Street, someone's broke in, and they get someone out there, whether you're home or not home, right? So that's a way to save. Property taxes, that's a totally different situation. There's not going to be a way that I see you can get property taxes down. A lot of states offer something called a home exemption. However, a homestead exemption. However, that's going to keep your taxes at bay for a little while. And, at some point, they are going to increase because the county has reassessed their taxes. So when you're looking to buy, wait, you're going to have to check and see what you qualify for overall, with all of those factors taken into play. And I don't think it's any harm in, applying for a mortgage and seeing where you are now, the way, because rates have dropped. And then if you have work that you need to do, then you can work on that, and you can monitor the market as rates begin to drop. Housing, we're currently in a market where we're seeing higher levels of homeowners insurance, higher levels of homes on the market, which means sellers are looking to move. However, the houses are staying longer. In June of this year, 56,000 homes, 56,000 people terminated contracts, meaning there was 56,000 people who were currently under contract looking to purchase a home. There was people looking to sell their home, and those 56,000 people dropped out. What does that mean? That was about 15% of the homes being purchased, which when you say it as 15%, that doesn't sound like a lot, but that's an all-time record. So, which means now homes are back on the market. If you thought that, inventory was low, then you have 56,000 more homes in the inventory, but then you also have potentially 56 more thousand, 56 more thousand people who are back on the market looking for homes, and it could potentially have doubled. It could have been 112,000 because the sellers were under contract, the buyers who were buying. So both of them are potentially back in the market looking to purchase a home. So, so waiting. A lot of people are still waiting because they want to see housing prices decrease. What goes up must come down, right? However, trying to time that is going to be very difficult. So what I would suggest is you just kind of not play the market, but you look at the market and you buy. There's people online, there's people on YouTube who say, hey, you should wait until the market crashes. You should wait till this. You should wait till that. You know your circumstance. You buying now versus waiting until something drastic happens could be the difference between life or death. Example, you're not going to wait until the market crashes if you're in a divorce situation and you need to move away from who's going to be potentially be your ex, right? You're not going to wait until the market crashes or interest rates continue to drop if you're in a situation where now your family has grown. You're having another child, and you're not going to say, okay, we can last until the interest rates drop, when you may already be cramped into a 2-bedroom, 1-bath house with 4 people, and now that fifth person creates a situation where you need to enlarge your territory to have a larger place to stay. You also want to make sure that well, not make sure, you're not going to wait that if you have an ill parent or your parents are sick and they need to move in with you, or come closer to you, and you decide, hey, the best thing for us to do is to have mom or dad move in with me. You're not going to say, okay, we're going to let mom and dad stay at home until the market gets better or it crashed, then we'll buy a bigger house. You're going to look at the solution and say, hey, I need to move. Doesn't really matter what interest rates are. Doesn't really matter. I need to find a place within my price range for me to purchase, right? And that, those are situations where I've come across, and people, they care about the rate, but they're not trying to wait until the market dies. They are looking to, move as expeditiously as possible to make sure they fit that need that they have. They're not going to wait and say, okay, we'll hold off until the spring when the market's different, there's more houses on there, and your mother or father needs to move in, or the baby. Let's say you combine families, you get married, you've got 3 kids, your new husband or wife has 3 kids, and now all of a sudden you guys have 6 kids. It's a family of 8, and you currently own a 3-bedroom, 2-bath. So those are situations where, do I buy now or do I wait? In terms, those are probably buy now situations. Do I wait? Okay, the waiting situation is, okay, I'm still looking for housing prices to go down. I think the interest rates will go a little lower. What should I do? Well, that's where I say, hey, get with a lender and allow for them to tell you what you qualify for. Once you speak with a lender, then you get with a real estate professional, a skilled real estate professional, as well as a skilled lender, and make sure, okay, I'm qualified through this lender for $400,000. What does that look like in terms of a payment? That's the buyer talking to the lender. The lender gives the buyer the payment, and if they're okay with the payment, then they go to the realtor and say, hey, I've been pre-approved for a $400,000 house. I need 5 bedrooms, 3 baths, with a bedroom on the main, with a bathroom close by, or a master on the main, either one, or it could be in rancher. So those are things you talk to your real estate agent about, and then you start looking and see if those things are available. Now, just remember, while you're in that market or in that situation looking, and interest rates drop or pricing drop, that means, yeah, you can continue to go. If you don't qualify at that time, and you say, hey, at least I know, based off of statistics that I have today, I can qualify for $400,000. But what I'm looking for in the school district or the town that I'm looking for is $450,000, $500,000. Okay, my lease isn't up until February. I have a few months before I have to make a decision or tell my landlord, hey, I'm leaving, and you give them 60-day notices, or can I go month to month, or do I have to re-sign my lease? So that gives you time. So buying, waiting, because interest rates drop doesn't necessarily mean that you have to jump in the market to buy. And I think that's what we ran into the what we call the pandemic, the coronavirus crisis, right? Something that people don't know is the reason why we have a low inventory is during that period of time, in 1 year, they sold 8 years worth of housing inventory. So that took off an additional 7 years of homes. And now those people who are in those homes are not necessarily stuck, but they're stuck, right? Because they got such low interest rates. But again, they're in that situation where, hey, if I decide that I need to leave, I may just have, and I can't keep this home or rent it or lease it out or rent it out. Or I need the money to sell this to get to my next home. Then you're in a situation where, hey, I may have to give up my 3-4% interest rate to get to where I need to go. So, that's, the big thing about buying or waiting. It's relative to what you need to do, relative to what your circumstances are. And, if you're waiting for the market to crash, I would say continue to wait and see. I'm not going to say it's not going to crash, but it's going to be a high probability that I don't think we'll see it crash. Wait till they release a ton of foreclosures. Well, we're seeing a lot of delinquencies because inflation and economics. However, they've implemented so many additional programs to help people stay in their home that it's going to be hard to see a ton of foreclosures, especially if it's a primary residence. So, buy now or wait, because, and, interest rates are dropping. Sellers are paying closing costs or paying a good portion of closing costs. However, housing prices are not dropping nationwide as fast as people think they should. And real estate is a regional, local market. Again, what happens in Georgia is different than New York, is different than Jersey, California, Washington, in the mid-Atlantic states of, not mid-Atlantic, in the Midwest, such as Missouri, Illinois, or Detroit. They're totally different markets. You have to look at where you're going to get a pulse of what's going on in the real estate market, guys. Hey, I see you guys are out there, and I want to definitely make sure I answer your questions. If you are just tuning in, I need you to go back to the beginning and listen where we discussed should you buy or should you wait. If you're listening to the replay, do me a huge favor and give me a thumbs up and hit the subscribe button if you're new. If you're out there and you have questions pertaining to home ownership, do me a favor, drop it in the chat. I'm here to answer your questions. I see we have a couple questions. Let me thank everyone for watching. Cool. Glad to catch you on your live tonight. I'm not in the market, but listening to engage and learn. I appreciate it, Miss Sheila. I don't want to be talking to myself all night. I know whenever Miss Eunice jumps on, she has some great questions, so I'm getting ready to answer a few of her questions as well. What would be the guesstimate on a $300,000 property to pay closing costs, down payment, and other fees? It's going to depend upon the state. So let's take it from the down payment portion. On the down payment portion, we are looking at, on an FHA loan, it's 3.5%. So that's $10,500 that we're looking at for a down payment. On closing costs, on a $300,000 house, depending Wisconsin, we're probably going to be looking at an additional $15,000, $15 to $16,000 in addition to the $10,500 that you're paying. So what we got to take in consideration, Miss Eunice, is, let's say we're in Milwaukee. Are we in Milwaukee city limits? Or are we in Milwaukee county limits? Because if you're in the city limits, you're going to be paying city and county taxes. If you're in just the county limits, you're just going to be paying, county taxes. So that's one way, but you're probably looking at 10,500 plus another 15. So maybe about I would say to have somewhere between 26 and $30,000. Yep, 26 and $30,000. Miss Eunice, if you I can't remember it, I have some down payment assistance programs for Milwaukee. So let me know if that's something you want to take a look at as well. Um, but yeah, other fees. So included in closing costs, if you guys don't know, included in your closing costs are property taxes. There's 14 months of homeowners insurance. There is 2 months that's escrowed into the escrow account for taxes. 2 months of escrow taxes, and the reason why I say it's 14 months of homeowners insurance is because you have 12 months that goes to the homeowner insurance company when they insure you. And then there is also 2 months that gets escrowed in for the real estate company so that we are going to make sure that we have a windfall. Because if taxes go up or homeowners insurance go up, we have something in the kitty in order to pay that for you in advance. Um, Oh yeah, that's what I'm looking for. But yeah, Miss Eunice, absolutely. Let me know. Reach out to me when you're ready. Let's even grab a call to make sure that you're moving in the right position, right direction, in order to be in position to buy when your time's up. What about the $25,000 down payment assistance for first-time home buyers from Kamala? So what I'm about to say is strictly my opinion. Um, so if you remember when President Biden came into office, he he proposed the same thing. Do I think he ever had intentions of doing it? Yes, I think he had intentions of providing some type of home buyers credit for having some type of home buyers credit for first time home buyers, first generational home buyers. I think that was his intentions. However, whoever controls the Senate and the Congress typically doesn't have the president. So then you have to get all of those parties in agreement. Um, so in terms of Vice President Harris, I think if she wins the presidency, I think she's going to run into a similar issue. I think she's going to run into a problem of having to prove to the Congress or Senate or both that we should be giving $25,000 to home buyers. Um, do I think that's her intentions to fulfill the same goal as President Biden did? I believe so. But then the other things you have to understand, president can only do so much. You still have to have Congress and Senate, and those bills have to pass. Do I think it's a good idea? I do. Um, but I've got a different spin on it because we're at a shortage of inventory, right? There's a ton of down payment assistance programs for first time home buyers. There's a ton of down payment assistance programs for home buyers, but I think we need to do something to appeal to sellers, to get sellers to sell homes, to get them off the steps. Um, so I think, proposing a credit or a similar credit to home sellers would help because it could help us generate and get more inventory on the market. But we'll see. I still get people who call me and ask about the $25,000 grant that President Biden wanted to put out, but it hadn't passed, so it's not into play. But I hope we see something that can help spur or help this real estate market. Ooh, Rachel, that's a great question. So, is it a good idea to use the builder's mortgage and title? And is there a catch? So as much as I would like to say no, um, it's not a bad idea, right? If you're purchasing a home and you came to me and said, "Hey, Kevin, I'd like to buy a home because you pre-approved me, and I pre-approve you. Let's go with the $400,000." And then you go to a new construction site with Bob the Builder, and Bob the Builder is offering a $15,000-$20,000 incentive. Nobody's going to top that. Like, I can't top it. We don't make $15,000 on the loan as a company. No other lender can do it either, other than the builders, right? What happens is the builder typically owns the mortgage company. And because they're selling homes, they have cushioned in, and it's nothing wrong with it, but they've cushioned in some funds where they can disperse it and give it to the buyer as a credit to use for closing costs. They cannot use it or offer it for any type of down payment, but it can be used for closing costs, right? It could be used to upgrade. Instead of the quartz countertop, maybe you decide you want the the granite countertop, or you wanted to upgrade the cabinets, or you wanted to add on and complete the sunroom or something, right? In terms of doing that. So, is it a bad idea to use them if they are offering an incentive? You're kind of stuck, because two things that I've seen happen. I've seen where you decided not to use the builder's lender and they make your earnest money deposit higher and typically sometimes non-refundable. And then I've also seen them, um, you know, not allow you to use them. Like, you have to use their people, or they make it extremely difficult for you to buy. And it depends on the builder, depends on the circumstances, right? All of those things make a huge difference, right? In terms of title company, again, they want you to use their title company because they have a relationship with them, and they probably have some type of marketing agreement. So using them is not necessarily a bad idea. You're not saving any money. They're not offering you any type of incentive. You're not saving any money by using the builder's title. Now, let me tell you who you should not use solely. You should not use the site salesperson. Why do I say that? If you use the site salesperson in this transaction, with the example you gave me, Rachel, you're using the person that works for the builder, you're using the builder's lender, and you're using the title company that the builder has a relationship with. So in this transaction, you have no representation. No representation at all. If something were to happen and they went to court, or you wasn't done right, everybody essentially is representing the builder in some fashion. So what you want to do, if you decide to use the lender that the builder offered to get the incentive, you decide to use their title company, which 9 times out of 10 you most likely will. Please go in with your own real estate professional, because then you have some form of representation. You don't, as of now, I don't see anybody offering you any extra incentive if you don't bring a realtor. And typically they're paying the real estate agents. Even though there's been a lot of rules that have changed, you want to have that conversation with your agent. And I'm actually going to do a video with a couple of real estate agents so we can discuss what this looks like for our borrowers, right? But I'll release that probably in the next week or two. But if you use the lender, you use the title company, make sure you come with your own real estate professional, because you're not getting a discount because you're using the site person. Yeah, mafia tactics. Be down and lay down is pretty much what they're telling you. You got to go with our people or you don't have no choice. Like, you want this house, use our team. We got the lender, we built the house, use our salesperson, use our title company. That's what they're saying, Rachel, in some cases. Are you licensed to provide mortgages in North Carolina? I have the ability to, yeah, to answer your question, yes, I do have the ability to write and originate mortgages in North Carolina. I also have the ability to write and originate mortgages in all 50 states, as well as the District of Columbia. So I can help you in any state that you're looking to purchase a home in. So that's not a problem. If you're out there and you have questions pertaining to anything in the market, even though the title is buy now or wait, should I buy a house? You can ask that question. If you have any other scenario that you want to ask me and hear from me, this is your time. Definitely trying to see how I can help more people and get their questions answered. If you're new to the channel and this is the first time you're hearing me and you say, oh, this guy knows a little bit something, do me a huge favor. Two things. It's free. It's free for you. Give me a thumbs up and hit the subscribe button. That helps me get pushed out and populate more into the YouTube algorithm. It helps my channel grow. It allows for other people in situations like yourself to gain knowledge from me. And I'm looking forward to helping you. If you're out there, you're afraid to ask your question, because I've talked to some people and see, I don't know who's looking. But I talk to some people who say, hey, I jump on your lives and watch your videos all the time. I just don't say anything, but you said something that made me want to reach out to you. In below, you will see my contact information where you can set up a free consultation. It will be a Zoom link sent to you. You can select the time, the day. You get 30 minutes to sit in front of me face to face. You can see me, I can see you, and you can get your questions answered pertaining to your situation. I've had a lot of people reach out to me recently because they've learned something from my videos that they didn't know. What I try to do in my videos is give you the real and the raw, to answer your questions and tell you exactly how it should go. Everyone's situation is different. It could be 3 people on this live and all of you have some sort of repossession on your credit. But on your credit report, it may report differently. One of you may have something that reports as a charge off. One of you may have one that reports as the repossession. One may say charge off, but then the money left over from that charge off is given to a collection company. And let's say the charge off was for $10,000, and now the collection company, you owe $10,000. Those are the same situations, but 3 different scenarios, right? So just listening to generic and high level stuff helps, but you need to get information specific to your situation. Okay. I've ran into situations where people have 700 credit scores and they had a judgment on their credit that they had no idea that they had or that they have taken care of. And those type of things can stop you from purchasing. But you have to have a skilled and knowledgeable loan officer who can help you navigate through those issues and give you a situation. Rachel saw you on YouTube and not YouTube, saw you on Shahida Hill and have subscribed ever since. Very clear and informative. Thank you. I appreciate it. I try to be. I try to be. So, thank you, Mama, thank you for joining. Again, like I said, if you're new to the channel or you're just joining this live, at the beginning of the live, we discussed buy now or wait, should you buy a house? I went through scenarios as when interest rates and housing prices don't really matter when you need to move through and navigate, right? I went through scenarios that, hey, interest rates have dropped. Should I go ahead and buy because interest rates have dropped? Do me a favor, go back to the beginning, watch it, get your notepad and take some notes because I think we gave out some great information. If you're here to this point and you say, hey, I have a question about should I buy or should I wait? And you want to ask your questions in the chat, that's great. If you want to schedule an appointment to talk to me because it's a personal situation, My contact information will be below, and I'll be able to help you with that. You want to make sure that you schedule a time and a date that works for you and that's available on my calendar. And the other important thing is, when you schedule the time and the date, check your email, because you will get a Zoom link. The Zoom link will give you access to me at that time. So I will log on. And the reason why I'm explaining is because some people have gotten confused. I will log on at the set time. So let's say it's Monday at 4 o'clock. I will log on Monday at 4 o'clock, click on the link, and then once you join, it will let me know, hey, Susie Smith has joined, and I will give you access into the portal so you can ask questions, and you can see me face to face. I can see you face to face, and we can get your questions answered. If you schedule an appointment, but you're in a situation where, hey, I don't have access to Zoom at the time that's available, do me a favor. My contact information will be there. Send me a email and say, hey, Kevin, I scheduled a call, but I scheduled a time. However, can we hop on a call because I don't have access to Zoom where I'm going to be at, and this is the best time for me. So a phone call helps as well. I like Zoom better. We get to lay eyes on each other. But a phone call or Zoom, either way. If you don't see my contact information, I've had people send me an email. Send me an email. Hey, Kevin, I want to get on the call with you. I'm available these times. What's a good time for you? And I respond back. So there's my contact information will allow for you to get in touch with me. If you're in the market and your question is, hey, do I buy now? Do I wait? And you may need help figuring out, do I buy now or do I wait? Because sometimes you have to talk the circumstances and situations out with someone. Just kind of talking through it. Okay, my lease is up in March. When should I start? Should I apply now? Hey, my credit's jacked up. Do I have time to get things situated? Oh, I need to save some money, but I'm not sure how much. Can I get pre-approved now and get an estimate of what down payment and closing costs looks like to see if I have enough funds, or to see what my options are? So all of those things play a big part into it. The best thing you should do in any market, whether it's now, later, if you're waiting for a crash, you want to make sure you're prepared. You want to make sure you are prepared so that you can be in position to purchase. If you want to prepare in advance and you need to get some things together, you definitely want to make sure you have your most recent 30 days of pay stubs. You want to have your most recent 2 months of bank statements, all pages, the account number on there, not blacked out, not crossed out, not cut out. You want to make sure you have your most recent 2 years of W-2s. If you are a 1099 employee, you want to make sure you have your most recent 2 years of 1099s. And if you're a 1099 employee and or self-employed, which 1099 and self-employed, consider self-employed, you want to have your 2 most recent years of tax returns, all pages, federal only. You want to have a copy of an unexpired driver's license, your social security card, or a passport if it's available. All of those things need to be ready. Okay, Kevin, I don't work. I'm on social security. What do I need? I need a copy of your most recent social security awards letter. I need a copy of your most recent bank statements, pay stubs, any of those things that you have in terms of pension, disability, even child support. I need a copy of your child support court order, and I need a copy of the history showing that they are current. Sorry, guys. Um, that you're current. Hey, Kevin, my money's coming from my 401k or an insurance policy. We need to have a copy of the most recent 401k statement or whatever statement you're going to have and pull your funds from for your retirement. An extra step to that you need to do is reach out to whoever manages your 401k and see if you have the ability to withdraw from your 401k or take a loan, and which one you can take more money out, just so you know in advance where your funds are coming from. If you use Cash App, If you use Zelle, make sure that you make those deposits into a checking or savings account frequently. I know Zelle automatically goes to your checking account. You don't want to hold your money in Cash App and then try to push it over. You want to make sure you're consistently, if you're doing it now, you want to make sure that you are consistently funneling, not funneling, wrong words. You want to make sure that you're depositing that money into your account. And if any way at all possible, I'm going to say stop using Cash App for that purpose, or make sure you have those funds going in. I do want to tell you that you can use Cash App. However, it's extra paperwork because the mortgage industry and real estate industry has not necessarily caught up with some technology, and they're asking for additional information and additional questions. I live in New York City and I want to buy in South Carolina. Can that be done? Yes, ma'am, Miss McCoy. That is possible. Few things. If you are a remote worker and you have the ability to work remotely using your job in New York and work from home in South Carolina, that's one option. If you are transferring your job from New York to South Carolina, we can get a letter from your employer saying that you will be working at XYZ company in South Carolina. And this is what your pay is, this is what your hours are, this is what your start date is. We can do that as well. Let's say you don't work remotely and you're still moving to South Carolina and you have a new job that you're getting in South Carolina, we can utilize the offer letter. We will do a verification of employment, which we do whether you work there in New York or South Carolina. We will use that, verify with the employer what your hours are, how much you're going to make, whether you're full or part-time, and we can use that as qualifying income. So yeah, it's very possible. There's multiple scenarios. There's even more scenarios than that, Lisa. If you have a spouse and he or she isn't moving right away because they have the higher paying job, you can do something called FHA, non-occupant co-borrower situation, where you can still come, they can stay back. You can use his or her income to help you qualify as well. You can do the same thing with conventional financing. There's a lot of options. If you want to grab a call and talk about specifically how you can do it and what your circumstances are and kind of talk through it so you position you and your family in the right way, click the link below and grab a call and we can discuss that as well. Cool. So in terms of interest rates, right? We're seeing them continue to drop. And I want to express that when they continue to drop, it is not always going, let's say, going from a 6.5% to a 6%, right? That's not always the case. It could be a 6.5% interest rate costs you $2,000, in discount points. And because rates have dropped, all of a sudden, instead of it costing you $2,000, it costs you $1,000, right? So when people hear the interest rates have dropped, oh, what are the interest rates? It's relative. It's different. What I mean by it's relative, it depends on your credit score. Are you using FHA, VA, USDA, conventional financing? Are you doing a bank statement loan? Are you buying and it's an investment property? Like, all of those things make a difference. Are you utilizing the down payment assistance program? Well, guess what? Some national down payment assistance programs, interest rates don't adjust as frequently as if you were using your own funds and bringing them to the table. There are some municipality down payment assistance programs that are in the same situation. They don't always adjust based off of the market. So what that rate's going to be is going to depend upon you, right? Depend upon your location. There's something called loan level pricing adjustments that have different pricing because of where you stay. Sometimes there's a little hit in the rate because you're in New York or Massachusetts or Georgia. There could be a decrease because you're a first time home buyer and you're using a Fannie Mae or Freddie Mac product with conventional financing. Like all of those things play a part. You could be doing FHA 203K, and that's a little bit higher because there's more of an investment on your side and their side, and it's a little bit more challenging. You could be doing a construction to perm one-time close loan, right? And that interest rate is going to be higher during the building of the home. And when it converts into a standard mortgage, whether it's FHA, VA, USDA conventional, then it adjusts to what your interest rate is. So all of those things play a huge part into it. It's not just about looking online and saying, oh, or hearing people say on TV, oh, I heard that you can get an XYZ rate. A lot of times those things say you got to have a 740 credit score, put down 20%. And in most cases, people aren't doing that. Yes, there has been adjustments in the interest rates ahead of, the inflation rate and ahead of the Federal Reserve dropping interest rates. Like there is, there have been some adjustments. However, those adjustments aren't always as they seem, right? But I have seen people, make adjustments, because, hey, the rate is where I have a comfortable payment. I'd like to buy before there's a ton of competition. And at the end of the day, nobody wants a mortgage. You don't want a mortgage. If you had an opportunity to get 123 Main Street and it offered a mortgage, or you just get the house, you're gonna go for the house because there's no mortgage. See, the mortgage is the piece that pays for the house. You want the house, you want the home, you don't want the mortgage. So you want to make sure that you have a comfortable payment. And by doing that, that allows for you to live and be able to do certain things. And no matter what your mortgage payment typically is going to be, home ownership is going to be an adjustment. It's going to be an adjustment because you are now the person responsible for cutting the grass. If the toilet stopped up, you're now responsible for the toilet stopping up. If, house catches on fire, you're responsible for making sure that you get with the insurance company and get adjustments and all those things. Like home ownership comes with a great responsibility. Yes, it is the thing that we can do. Yes, it's difficult. Yes, it's rewarding and fulfilling. But all of those things, come with responsibility. To much is given, much is required. So when you're given the opportunity to purchase a home, there's a lot of requirement from you, and you have to make sure that you're in position not just to buy the home, but to keep the home and maintain the home. If I had any scenarios for people who says, I want to wait, that's fine, perfectly fine. But make sure you're in position when you're waiting, or getting in position while you're waiting. Couple of things. One, I just mentioned getting your documents together, making sure that you have those things prepared, set aside in the spot where you have them. I would even go as far as saying make sure you have those in a file electronically so you can email them to your lender or upload it when you get your application. I would also say the next thing is to continue to figure out how to save funds. Look at a budget, figure out what you can cut back, how you can increase your earnings, and try to save money. It's expensive to purchase a home. It is expensive to maintain a home. And I don't care if you have a down payment that's paying, assistance program that's paying all the down payment, and you have closing costs being paid majority by the seller, you're going to need some type of funds to move, right? You're going to need some type of funds into the deal. And just to give you a cute few tidbits and things to put along with waiting and preparing, you want to make sure that you prepare to pay for a deposit to put onto the house to show your consideration of wanting to buy the house. You want to make sure you set aside, I'm gonna say at least five to $600 for a home inspection, and then you want to make sure you want to set aside the appraisal. I had a brain freeze. Um, you want to set aside money for the appraisal. Those are three things that are paid for out of pocket upfront that you do not get reimbursed for the most part. Uh, your not home inspection, but the deposit that you put on the property could be refunded to you if you had a legitimate reason and circumstance for getting out of contract. Again, guys, we've got about 8 good minutes left. We've got about 8 minutes left. And if you have questions pertaining to home ownership, drop them below. We've got more people viewing right now than we have questions. Couple additional things. So if you are not subscribed to our newsletter, do me a huge favor, join the newsletter. We put out some good information. We're constantly revamping what we put out. Like, we send out notifications that we're going live. We send out notifications of videos that you may have missed and came up. And then we've been changing a few things, and we've been showing different scenarios that we've saved from other lenders that buyers had when they came to us. So definitely reach out, get some information. I'm never going to try to harm you. I'm always going to try to help, whether I'm the right person for the job or not. Everybody doesn't necessarily mesh, but definitely reach out and find out how I can help. If I can help, can't help. If you know anybody who could use my help, let them know. Let me know. Send me their contact information. Do I charge for the Zoom consultation? I do not. I don't charge for consultations. I'm not into charging for consultations. I'm into closing loans for people and making them homeowners. So guys, if you ever want to show me some love, I will take super chats. So just let me know if that's something you want to do. I do take super chats. They have them on here. We've activated it. So if you ever want to show a brother some love, you can show me some love that way. But yeah, the Zoom link is that consultation is not, there's not a charge to it. Also, got to highlight it, Home Buyer's Journal. This walks you through the home buying process. You can journal your way through, you can journal your way through your journey of home ownership. It just gives you information. It gives you places to take notes, information about conversations that you have with your lender, conversations that you have with your realtor, conversations that you have with your spouse, notes that you can take. It's a true journal. You can put all your thoughts in here on houses that you've seen, things that you've seen, things about your budget. It's definitely a great tool and resource for you for now, even before you start buying, in the buying process. And then even after you've purchased, there are spaces in here where you can take notes on certain things in your your house, who your utilities are through, who the HOA is, and what phone numbers. Take notes about different things about the house when you purchased it. Hey, in 2024, I purchased this home in September, this, and that. And then, oh, okay, 2028, replace the roof, because then if you go to sell it and somebody asks, hey, when did you replace the roof? And you're like, I can't remember exactly when. Oh, let me go back to this journal that I have, and I've got notes in here. You can do all of that information. And if you decide, hey, when I transition, to pass it along to one of your kids or a family member, you can just give it to them or have it available with your belongings. Or if you want to help out the current buyer and say, hey, here's some notes pertaining to things that we did, like right here. I don't know if you guys can see it. It's important dates. So like a year's worth of important dates, or every month in here of important dates. And it doesn't have to be every month that you put it in, but you can just say, oh, January of 2026, new hot water heater. So you just keep putting down valuable information, because those things help when you're going to sell your house, because people want to know, hey, does any of this need to be replaced? Oh, I purchased this a couple months before you brought the house from us. Hey, this is still under warranty. All of those things help. Oh, thank you, Rachel. I appreciate it. So, hey, guys, if you have any questions, drop them below. If you don't have any questions, I'm going to get out of here. I just came from baseball practice before I did this, so I'm hoarse. But I'm here for you. Again, if you're watching the replay and you have questions, drop it in the chat. If you're here and you want to jump on a Zoom call with me, all my contact information will be below. If you're watching and you say, hey, I like this guy, do me a huge favor, give me a thumbs up. And if you like the channel and you want to get notified when we jump on again, hit the subscribe notification, and just, it's free. It doesn't cost you a thing. Free 99, right? If I don't see any more questions, so I am going to say thank you, good night, and God bless. It says, hey, Kevin, my husband and I are looking to purchase our first home, hopefully in the next few months. Will it hurt to have a lender pull our credit right now? No, ma'am. It won't hurt. Let me dispel a myth. When your credit is pulled, it typically costs you between 0 and 5 points. However, in some cases, people need to increase their credit score. So if you have to increase your credit score, you're going to get those 5 points back. And we don't know if it's 0 or 5, right? Because the score that you have and see on Credit Karma, Credit Wise, Credit Sesame, those aren't the same scores that we see, right? So don't be afraid to have your credit pulled. I don't know any lender, and I'm going to get on soapbox. I don't know any lender that will take a credit report from somewhere else and view it, because it takes us longer because we don't see it. So, Miss Simmons, I'm sorry, Miss Simmons, it doesn't hurt. It can only help, for them to give you. Because if you need a game plan ahead of time, so they're going to, if you pull it now in August, and you guys aren't looking to buy until January, you'll have to get your credit pulled again. But if you wait until January to get it pulled and you need work, then you're going to kick yourself in the butt and say, man, I should have got my credit pulled sooner. So I said all that to say, no, it doesn't hurt. It doesn't hurt. It doesn't hurt at all. A few points off, but it's worth the wait and go, because it could be the difference between you being able to buy in January or February, or having to wait and then you got to re-sign your lease. So it doesn't hurt. You're welcome, Rachel. Thank you, Kevin. My husband and I will be contacting you soon. Thank you, Miss Eunice. I appreciate you jumping on as usual. And thank you, Miss Ruby Stewart. I appreciate it. Thank you. I try to give good information, guys. Again, reach out to me. I'm Kevin Jefferson, the People's Lender. Have a great night.